Hi, my name is Mark Seymour, manager of the Northstar Income Fund, and this is feedback for the fourth quarter 2021. The fund performed really well during the quarter, delivering 2.4% return, which is 1.4% alpha above benchmark, and the bulk of the contributions coming from 1% from fixed bonds, 70 basis points from inflation-linked bonds, and 1% from gold. The number one problem facing markets currently is inflation. So in the US, you've got inflation that's coming at 7%, and which is a 40-year high. And this is as a function of the rapid growth in money supply, the fiscal stimulus, and the supply chain issues. Conversely, in South Africa, inflation is coming in at 5.5% and is expected to moderate. So looking forward, the inflation differential is expected to diminish versus history, and couple that with elevated commodity prices should be very supportive of the local currency. Focusing on the US, inflation is the dominant concern for the Fed, and this has resulted in a policy response change. So what we do see currently is the reduced pace in asset purchases. That's likely to be followed by interest rate hikes starting in March this year. And then thirdly, they're going to be looking to scale back their balance sheet. These three factors are likely to be headwinds for markets. And at this point in time, we see global financial or fixed income markets as being very expensive. So if you look at the US 10-year at the moment is trading at 1.75%. Even in an environment where inflation may moderate back to 2%, and you have interest rate hiking cycle of 2%, at best, fair value for the 10-year would be somewhere between 2 and 3%. But failing those conditions, you could see even higher yields. Conversely, the local bond market is actually very cheap. So if you look at the 10-year point, currently trading at 9.7%, and you contrast that versus potentially long-term, long-run inflation of 4.5%, gets you to just over a 5% real return, which is very attractive. We have to acknowledge that the local economy is actually very fragile, and that fiscal risks do remain elevated, and so for that reason, volatility is likely to remain elevated. Against that, if we look at gold, we believe that gold is very attractively priced, especially given the accelerated pace of money supply, and that globally. And then you contrast that against financial markets, which are trading on elevated valuations, multi-decade valuations, and we believe that on that basis, gold offers attractive qualities. And so all in all, the Northstar Income Fund has a predominant exposure to local fixed bonds, local inflation-linked bonds. We don't own any global bonds, and then outside of that, we do have a small but meaningful holding in gold. And all in all, the fund is trading on a yield of an attractive yield of 7.2%.